Hey everyone, it's Evan here from the Trade Risk on Wednesday, April 19th, and this is our midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Hope everybody's doing well out there. As a reminder, if you guys like these videos, make sure you do subscribe to our YouTube channel. It keeps you up to date with all of the latest videos that we're putting out on a day-to-day, week-to-week basis. So let's get into the action here. S&P 500 finished lower on the day, down minus 0.17% here in the SPY ETF, and that was after a nice bullish open this morning across all of the averages, and we're going to talk about that in just a minute. First, let's take a quick step back here on the weekly chart as we usually do. You can see we're actually up right now almost 0.5% on the week, 0.42%. Started off the week pretty strong there on Monday, and you can see on this weekly chart you got a flattening out 8-period moving average. Prices below that 8-period moving average right now, but still above a rising 20-period, and we still have a nice textbook sort of consolidation pattern right now in the context of an uptrend. Now back to the daily chart. If we take a look at where we came in here on Monday, that was this session right here. So if you remember last week, we had the holiday shortened week. We were closed on markets, U.S. markets on Friday. And on Thursday, they just sold us right off into the close of the day. And we closed at the dead lows here, looking real weak, heading into the weekend, looking very vulnerable into the weekend. But there was no gap down. There was no Monday surprise. It was actually a surprise to the upside, and we started off with this gap higher, and then we charged higher all day, closed at the highs on Monday. So almost a 1% rally here in the S&P 500 and the SPY ETF, and that was encouraging, but there was no follow through, right? We rallied right into resistance, right into a declining 8 and 20 period moving average here, which are bearishly aligned on the daily chart, and we got no follow through. We actually had an inside day on Tuesday, which was yesterday, and today we popped up and opened up right above yesterday's highs, and we tried to push higher, and we failed sort of exactly where we should. I mean, if you're a fan of technical analysis, if you're a fan of respecting sort of this recent trend here, this downtrend, these bearishly aligned moving averages, and this support, which was support right in here, right at this almost 234.50 to 235 zone. This was, again, support for an entire week, a little over a week, right in here, very nicely bouncing off of this general area. Well, that's what we tested today. That's what we tried to break back above, and we failed sort of exactly where we should, and sellers took control, and we closed the day on the lows. So an absolute, kind of textbook bearish sort of short-term development today, opening up near the highs of a session and then being sold off. That's exactly the opposite of what you want to see in the healthiest markets. You want to see us open on the lows and close at the highs. Well, this is the exact inverse. Now, here's the thing, it's not all bad, just like Monday, where we had this nice rally, right? We had a 1% move all the way up into this significant area. It's the follow through that really matters. And today, again, with this bearish close here, we're looking a little vulnerable. Do we get follow through tomorrow, or is this more continued noise in this general area? That's what we really need to figure out and pay attention to. So follow through tomorrow by the sellers are key. They're set up to potentially take us lower tomorrow, but again, this market's just having a lot of difficulty getting follow through in either direction at this point. Just a bunch of failures, pretty much. Every time we make a good move in one direction, it's faded, and the correct move has been to reverse it. Not saying that is the correct move today. I'm saying I have absolutely no idea, and we just have to wait and see how this shakes out into tomorrow. So that's really the punchline here. We have this downtrend line intact. We have higher lows here, potentially intact here from the low from the 27th of March, and then the recent low here from the 13th. Let's see if that changes. Let's see, if we get follow through to the downside, if we reverse and start to clear back above 235. That's essentially the goalpost, the levels that I'm paying attention to. Today's highs here in the SPY, if we get above those, I'd consider that a pretty good good bullish development, or at least something much more neutral to a slightly bullish bias. And then if we start to break down below these lows, of course, sellers will be in control. And you could arguably say that they are in control right now, just given the way these moving averages are aligned and where price is relative to them. So that is the outlook here on the S&P 500. If we move to the IWM, we're actually seeing some outperformance this week out of the IWM. That's encouraging. They're actually up 1.6% here on the week. And if we go back to the daily time frame, we talked about follow through in this market being tough to come by. And absolutely, this week is a picture perfect example. Again, Thursday, they sold us off into the close. We finally closed below that 134 level, looking extremely vulnerable, just basically going out into the weekend here, looking over a cliff. And we came into the week reversed and closed strongly. We held this 134 support, and we're actually holding, remarkably well given sort of the developments this week. We have a major fade off of the highs of the session, but we still finished up 40 basis points nearly, and the leader today is the small cap. So something to take notice of. If are we seeing pessimism sort of increase throughout this range here, and are these lows holding? That could be an interesting sort of contrarian signal there if that is the case. For me, this is an absolute headache, just given where this is in the middle of a range. From 4 months long at this point. So really just a wait and see here, but notable outperformance there in the Qs. In the IWM. And now looking at the Qs, again, still just a sideways range here if you want to draw the recent support down here from the 27th of March and the recent highs up here from April the 5th. You can see we're just kind of in the midpoint of that range, extremely flat, completely overlapping 8 and 20 period moving average, and price is just kind of clinging on to it right now. So just hallmark indecision there on the short term, something that, we just need more time to see how this develops, but is still holding up the best on a relative basis. NASDAQ 100, without a doubt, is still sort of the king here amongst the major averages. So lots of mixed signals, got some volatility, a little bit of volatility anyway, for you shorter term traders to potentially latch on to. Let's see how the rest of this week develops. Of course, we got earnings season, we got headlines, we got all the good stuff that's coming up that can move this market. So certainly want to pay attention to your holdings and earnings dates, sectors, all that fun stuff. So with that, let's get into some of the other major markets here. TLT pulling back today, down 0.5%, but still in a bullish uptrend. I mean, this was the significant breakout here. It occurred really last Tuesday and Wednesday with the follow-through day to get back above these prior highs here, and we're just trending up nicely. There's a big old gap over here from late 2016. If we go to the weekly chart, you can see the 8 period is it's racing higher to potentially curl back up and start to bullishly align there with the 20 period exponential moving average there on the weekly chart. So certainly some bullish developments. The dip, a pullback like this is hopefully you'd like to see it met with buyers. If we start to lose below 122, that would be the sort of bigger intermediate term line in the sand for me while looking at the TLT. Let's go to oil next. This one definitely was the big mover today, down almost 4% on a big uptick in volume. This is volume last seen from this breakdown here in early March, and it's really occurring at sort of the same exact price points as early March. You can see we had this very powerful V-shaped rally here off of $10, off of this longer term trend line of support, and we just carried ourselves higher to retest this prior breakout level, and then we rolled over from here. Now, as I always sort of try and remind people, USO, there is a reasonable amount of drift, of slippage here from the underlying futures contract, so you do want to try and chart that underlying futures contract to get some more precise sort of supply and demand technical analysis levels. But the broad strokes you can basically see here: failure to sort of reclaim and take out these highs or get back into this previous consolidation, and then a rollover here on an uptick in volume. Pretty large move, something I would not be that interested myself in just trying to blindly buy this dip. I would want to see the dust settle here to see some stabilization. Otherwise, price can move pretty quick through these levels, this 11 and 10 and a quarter range like we've seen in the past, on the way down and on the way up, both very fast moving throughout this level. So something to pay attention to. I'd respect it for now. Uptick in volume. Let's see where it takes us. Weekly chart, you can see still kind of a very sideways, indecisive range that we're in, but you can see again 8 and 20 period actually curled lower, so bearishly aligned here on the bigger time frame. So certainly some warning signs to take notice of today in oil. If we go to natural gas next, you can see not as bad here. Recently started to taper off, broke this trend line, this rising channel that we've been in throughout March, and you can see just moving sideways, kind of flatlining here. A little bit of an uptick in volume. If you get a move back above 770, maybe you get continuation of this prior trend. If we start to lose 740 or so, then you'd have to be careful of a larger pullback. But something that very loosely paying attention to. Not all that interested in natural gas right there, given where it is. If we go to the metals next, bit of a pullback here as well. GLD has been in a nice bullish trend, broke this trend line here, this long-term trend line back just last week, really, the 11th, last Tuesday. And you can see it's starting to retrace a bit into some of these fast-moving averages that are bullishly aligned. Trend is up. Let's see if the dip buyers step in. Silver, a little more pessimistic here. You can see it's really struggling to clear these recent highs. Gold, is off to the races, clearing the April highs and just kind of smooth uptrend, whereas GLD is just having a little, SLV is having a little bit more trouble here, and something to pay attention to. Watch volume, a little bit of an uptick there the past couple days, but nothing too extreme just yet. But you definitely want to pay attention to these lows. Could be, could be maybe a top developing here, or maybe just a larger range, and have to see how it develops. You have this potential inverted head and shoulders pattern at play if we can start to convincingly clear this 1750 level, and you could probably draw some trend lines from these August lows to where recent price is stalling out there. So that's the metals, that's oil and natural gas. I think that is everything. Let's move into some sectors. So for sectors, let's start with the leaders. XLP, bullish trend here, some bullish momentum recently, pulling off a little bit today, so coming back into yesterday's range, but still, all things considered, the safe haven, the staples, the boring names, these have been working, they've been holding up, they've been consolidating. So again, a little bit of a pullback. Maybe these highs are going to stay firm, maybe we are going to trade back into this old range, but so far on a more intermediate long-term perspective, XLP, the staples, are intact and holding. XLU, very similar situation, again pulling off today, not clearly breaking out of that $52 resistance, which has been resistance since the beginning of March, but still on a relative basis holding very firm here, very defensive. The utility sector, and then XLY, the discretionary ETF, also holding very firm. In fact, closed green on the day. I'm not sure if there were some earnings that maybe affected this sector, but XLY on a relative basis holding up very well. Now on the downside, there's a longer list. Those are basically your three sort of outperformers, top leading sectors right now. On the downside, XLE is just a complete dog today, down 1.5%. Actually making new lows, taking out the lows here from March 27th. We were very sort of bullish, looking for a tactical bounce here back, when we were talking about this trend line, talking about this, 10% off the highs in XLE back in late March, mid-March, late March, all in this area. We did get that bounce. We were fortunate enough to participate in that bounce ourselves, but support did not hold, right? We clearly broke below $70. We broke this fast trend line, and then we just continued to break down through support. So this would have me certainly more concerned. We don't have any exposure to energy at this point, but maybe short term it's oversold with a very quick drop from $71 to $67 in just a few days. But XLE is certainly a bit concerning. I would like to see it back above $69, $70. If we can reclaim that level, then the opinion would sort of change there. But XLE looking vulnerable, and especially if USO has more to unravel, you're going to have to be a little cautious there in XLE. IYT, so Dow Jones Transportation Average, still looks like it's in some tough shape here. It's tried and it's battled with this 162 level. It's gotten back above it. Remember this level was support in the beginning of the year. We traded mostly above it. We broke below it. We broke above it. We're back below it now. So we're sort of just all over the place between this level. But I think it's pretty important. It's at least a near-term sort of line in the sand to use. And right now we're below it. 8 and 20 are bearish. Got to be careful there on the IYT, even though some of the airlines are working right now, but that's not the only component there in the IYT. XLV, quiet downtrend. I've been again watching this for a potential trade, watching this for a pullback breakout trade, just did not materialize, and therefore there has been no trade in this for at least for us on XLV. Had a component in here that we were in that we ended up getting stopped out of. So XLV itself, though, still struggling, bearishly aligned on the 8 and 20 period. It's below $73, $75, $74. I think you have to be cautious. And then finally, back to the materials, back to the lower end of this range. So we'll have to see how they act here. Could just be seesawing in this 2-point range or so, 1.5 range. Remember, they were holding up very well up here. They broke down, came to the bottom end, and now we just really need to see if they can respect the support. Oh, and financials, before we end there, also at a pretty key, probably a very watched level. That's the that's the very sort of obvious level that I think a lot of eyes are on right now. And generally, when there's a lot of eyes on here, it's a lot of kind of shake and bake and some back and forth action and lots of false moves, at least the way I view things. So this $23, again, I think a lot of eyes are on it. Weekly chart, you can see how important it is. This was sort of the lows here from January and again, starting to potentially break down here on the daily chart. But I'd pay attention to it. Let's see if the bulls can step in. There, again, has been lots of volume, uptick in volume here on this recent pullback. So there's certainly cause for concern, but let's see how it shakes out. Again, $23, very watched level at this point in the financials. So that is, I think that's everything that I wanted to cover. I hope you guys have a good rest of the week trading. If you like these videos, make sure you do subscribe. Otherwise, thanks for watching, and I will talk to you again soon.